Good morning, good afternoon, good evening, and welcome to the slightly late running Wednesday, the 25th of May, Bull versus Bear webinar. Steve Miley on the call for trade day. So welcome everyone. We're going to go through our usual regular run through in here today, calendar, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires. What are the macroeconomic fundamental events and geopolitical events that are impacting markets right here, right now. And we'll take a look at the charts. Kicking off with the calendar in here, I've already had in here the Lagarde speaking in here this morning. Nothing too significant in here coming through from comments out of the ECB today with their financial stability review. ECB's Lane has also spoken this morning. Again, significant coming through from that. We do get durable goods orders in just under 1 hour. Crude oil inventories. In 1 hour, so that's 8:30 Eastern time, 7:30 Central. And 1:30 if you're in the UK, 2:30 if you're in continental Europe. And we get crude oil inventories 10:30. I'm not going to do all the translation all the time. But the big focus, actually, just to say, we do have Brainard later today, 12:15 East. And then 2 o'clock Eastern, we get the Fed meeting minutes. Now, there is a focus on the Fed meeting minutes. However, I really do not think we're going to get anything significant affecting markets. The Fed have been very, very transparent. We've had lots of Fed speakers. Jerome Powell has spoken at length on this, and we pretty much know where the Fed stand at the moment. Next to meetings, we're expecting 2 rate hikes of 50 basis points, and we go to the Fed tool in here. You'll see, look, June 83% now nailed on for a 50 basis point hike. Hardly any chance of a bigger hike. They're kind of doing away with the risk of a bigger hike. And then there we have so now we have a risk of not as big a hike in here. So in the next meeting, so now in the July meeting, you see now we've got most of the 86%, pretty much priced in that we're going to get another 50 basis point hike. Remember, it's 75 to 100 at the moment, so up to 175 to 200 at the July meeting. That'll be 250 basis points. However, a slim chance that we only get a 25 at the next meeting. Concerns of recessionary pressures coming through in here. Maybe the Fed won't be as hawkish. So this hasn't been here at all in the last few times we've been looking at this. We haven't had this bar at all. So there was no chance of really only a 25. Now a risk of a 50, then a 25. But still also a greater risk that we actually get a 75 at that meeting. But nevertheless, just showing that there's concerns because of the data coming through on the economy, particularly some of the stuff coming through that we've seen through from the retailers and from social media. Obviously, Snap was the one yesterday. That is a real concern for Martin here. So let's go to just back to the calendar here. So that's going to be the focus of Fed meeting, but I don't really think it's going to have a really big impact. Durable goods orders, crude oil inventories, Brainard speaking ahead of the Fed meeting minutes, and then the Fed meeting minutes. Let's go to Bloomberg's wrap of 5 things you need to start your day. Nothing really significant in here. Going to there's a tweet from Michael Burry in here, who was the star of The Big Short in here, called the Global Financial Crisis of 2008 bet against the housing market, and he now deleted tweet. He said, as I said about 2008, is like watching a plane crash. It hurts. It is not fun. And I'm not smiling, I say. So he usually does delete his tweets. Okay. But that tweet went out. So, and here we have another article on that. Michael Burry posts cryptic tweet raising spectre of 2008 crash. Davos is going on at the moment. George Soros, I think, was speaking there, also very negative about the impacts from the Russian invasion of Ukraine, could lead to another world war. What's going on at the moment? Advanced economies will recover soon from the pandemic. Growth forecasts in China have been cut. And going into the day, we've seen stocks did rebound yesterday. So we had a very negative day. When we came on the call, we were hardly down really on the day, and the market's significantly lower through the day on worries from that Snapchat. Having had the real worries last week from the retailers, from Target, Walmart, Lowe's, etc. The Snap earnings concerns in here, sending social media stocks plunging lower yesterday. We did get a latter session rebound and a post hours rebound, although that rebound has faded somewhat as we've gone through the European session today. So S&P 500 in here, they're talking about that in this Reuters article. So Snap tumbles, NASDAQ slide, weak economic data, diet outlook. stokes recession fears. We also had Abercrombie and Fitch yesterday slumping after lowering its revenue outlook. Snap was the really big one, though. But the indexes did end up. So, the Dow actually ended up on the day by just 0.15. The S&P was down 0.81, but the Nasdaq really took the brunt of it, down still over 2%. Although there was a late session rebound and after hours rebound as well. I'm just going through a few of the other headlines in here. US futures wobble before Fed minutes, dollar gains, treasury yields steady. So looking for more clarity from the Fed. We've already talked about the Twitter post there. Retailer sell-off leads COVID stump in the dust. So again, Abercrombie follows Target in here. So Coles lowering guidance in here. So all kind of quite negative coming through. European exchanges pretty much unchanged to slightly up on the day this morning. Just getting a bit of that rebound, having sold off. And as I say, European bourses in here far better in here, coping with the negativity that we've seen from on the tech side and from the on the retailing side. So, markets in here actually dealing with it far better than previously. Let me just go to a few run through these others in here. So just where we are going into today on, so that's the European bourses. So say we were down in here, notably Dow. Actually, you say Dow up, S&P down. But then this morning, having had decent rebounds, a lot of these were in the green this morning. At the beginning of the European day, we were up in here, back down again in here. Not hugely down, about 0.25% across the board, but we were up about between quarter to half or even more this morning, at the beginning of the European day, but lower now in here. Stocks tumble again on growth concerns, bond yield slip. This is a recap from yesterday. And then European shares bounce back with rise on central bank updates. We obviously know that's coming. We've already had an update from the ECB today, and we've had Lagarde and Philip Lane speaking. Nothing really significant coming through there from those guys. But we obviously got the Fed later today. And I say European shares doing a little better in here. Nothing to want to focus on there. And there we have the Fed tool that we've already looked at. Let's take a look at some charts. So now I'm going through a little bit quicker in here today, but there's not a huge amount of kind of new news in here, apart from the price action really, which was obviously very, 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 very negative. So bond prices still going up. This is up in higher in prices. It's the US 10-year note. Price is up, and you can see we cleared this peak in here from the end of April. We got above there yesterday. I'm pushing back above here. So higher prices, lower yields. This should be good for tech, right? This should be good, but it's not really coming through into the markets, because the reason this is going up in here is because of kind of a safe haven bid. Really, that's the main reason for this going up in here. Concerns that the Fed won't be as hawkish. Why won't they be as hawkish? Because they're really concerned about recession going forward. Okay, let's take a look at the S&P first of all. So you can see we did get this really strong recovery yesterday, having the big sell-off. We were trading about here, and it wasn't a disaster when we spoke yesterday on the call. And then we get this big spike down to the downside in here with Snap, and then the market does rebound intraday and closes kind of, not too much down on the day, pretty much where it opened up. But you can see this morning we did go higher initially and then dip back lower, and we can take a look at that. So kind of the market at the moment kind of dancing around this kind of area. Between like 38.50 and like just above 39.50, 39.70. It's kind of done a lot of work in here. You can see the previous lows. It was trying to hold around this kind of area. Either side of 3,900, like the 50 index points, either 3,900, 38.50 to 39.50, really. The market's kind of dancing backwards and forwards between this area. It did some work back in here, back in the middle of May. Then we got the strong rebound and that massive sell-off after the Target news in here last week, and then the spike lower and then rebound at the end of last week, and then spiking lower again yesterday and rebounding, then back lower again today. It's doing a lot of work. Now, this is typical of what a market would do in a bottoming basing pattern. That's kind of why a lot of the time I'm coming to this each day. Like, it feels like it's trying to bottom, but from the day, if you're a swing trader, I'd be kind of like looking to it entering longs as a swing trader. Now, that doesn't help you as a day trader, right? But then as a swing trader, that's why I'm coming to this more like thinking, this feels like it's trying to bottom. It's trying to bottom. You get these, every time we've hit these lows, it comes back back here in the middle of May, back last week on Friday, big sell-off, big rebound, big doji candlestick in here, rejecting the downside. Yesterday, big rejection of the downside, but it doesn't, but then each day we come back and boom, back to the downside, back to the downside. So, if we step in now to the 15-minute chart, again, you'd argue, even looking here, this still looks like, on the bigger chart here on the 15-minute, you got there's the big sell-off in here. Okay, and then that other plunge lower in here back on Friday, but this looks like a bottoming pattern. Look, the work, you see the way where it says again. I mentioned 38. There's 38.55. That's around 38.70. The market's putting in a lot of work in this kind of area, trying to form a base in here. But you look at the price action this morning. Having had that sell-off and rebound yesterday, and then it rolls back lower in here, and you're like, well, it feels like we're going to just be testing back down to yesterday's lower, maybe even below, right? But for me, this still feels like a base pattern. You could argue, right, this is a bigger, we spoke about it over here as being maybe an inverse head and shoulders, this little one here. Okay, now maybe we got this. I'm going to just get rid of these lines, and then maybe you got this as a bigger inverse head and shoulders. So let me see if I can put on the I don't use this tool that much, so let's hope this works. Yeah, that's not too bad. So you got like shoulder there, and then you got arguably there's the head, and let's see how I do on this one. And then shoulder there. So you got this inverse head and shoulders. Now you'd argue, right, where's the point where you say here and here, right? The 2 points. So it's a very upward slope. So you got a lot of work to do. This is not going to help you as a day trader, but this is something to be watching and maybe monitoring going forward. So it needs to get all the way up here. I mean, it's a long way away. But if you can get back above yesterday's high and certainly get back above that peak, then it all starts to look a lot more positive. This looks more like that inverse head and shoulders is tracing out. It needs ultimately to hold this low in here from yesterday, right? At the moment, look at this 15-minute chart, the last 4 or 5 bars, boom, 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 looks really negative. I'm not buying this, right? At the moment, I'm happy to be short. At the moment, it's pointing south. I'm looking for it to move down to here and here. But as it comes down into this area here, into these lows down here, 38.89, and then obviously the low down here, 38.70. As it starts to move down into this area here, if it starts to form a base and turn, then I'll be looking in here at the counter trend line. So at the moment, I'm short. At the moment, it's bearish. You can't deny that it's bearish. If we go back to the daily, it's a failure. Even though you get this rebound in here yesterday, it fails today, right? It's definitely failed this morning. But, we're not into the real market at the moment. The cash market's not open. So at the moment, happy to be short running into the cash market open, maybe happy to be short going into the Fed. But then if this starts to hold in this area here, somewhere between here, like 39.05 down to like 38.80, somewhere in that area, if it starts to hold, and it starts to turn, then we'll be looking at that, like you're looking for resistance points for it to recover back above. And then you're looking at kind of this counter trend line, this little one that we have just coming down from this morning, okay, for the last 3-4 hours. If it can cut back above there, then this all looks a lot more positive. Okay, so just be wary of that. As bearish, I think you go into the day looking fairly bearish, but possibly looking for buying opportunities down in here. If it just cuts straight through these supports, boom, 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 you can easily see the supports in here. If it starts to cut down through those supports, you can put your Fibonacci's on here, whatever you want to do, pivot points, whatever you use. But if you see it start to cut down through supports in here and it's not holding at all, then stay short. I'm not being aligned to any one directional bias in here at the moment. This market is flipping on a dime, so you've got to be able to turn your directional view whenever you need to. So happy to be short for now, but wary that this looks like a bigger basing pattern. The market has found support in this zone in here, all the way through this zone. So watching for maybe support to kick in, and if it does and starts to turn, as it breaks back up through resistance, then we're looking to go long. And again, in here, it's a similar story to the Nasdaq. Not as positive for the Nasdaq, but again, look at the down here, back in mid-May, not as great a rebound in here, but then back here on Friday and back here yesterday, solid rebound. Doesn't like it down in here. Basically where we are now, it doesn't like it between 11, say, I don't know, 11,650 down to 11,470, right down to the lows. It's held here, but we're pushing back down there. Am I going to fight it? No. You're going with it. Look, this looks terrible. Lower lows and lower highs now on the 15-minute chart. But again, on the bigger picture, you'd argue this is trying to base. This doesn't look nearly as nice, right? This doesn't look nearly as good as a basing pattern, yeah. But you do have more of a horizontal line running across there. I'm not going to draw my little pretty pictures, but you've almost got like, straight across here, right? Apart from that peak there, you've got this line going across here, right? Where you want to draw it there or there, but you've got a line, that's up, where is it? About 1207, what, 12080, it's 12075,080. Up through there, then it all looks a lot more bullish, but we're not anywhere near there. And you can see in here, look, it's failed multiple times at this area here. Okay, I'm going to put on this, like across here. Yeah, look, failed here, failed here, failed here, failed here, failed here. It needs to get above 11,900, and then we've got, the little counter trend line. But for now, bearish, right? There's no reason not to be bearish. You've got this downtrend line coming through here. But, looking to hold. Look at these two little supports in here. These are... Where are we? 11,650, 11,642. If you can hold these supports in here, start to build a little base and turn as we go into the cash market open. If it just flushes straight through this low, you're staying short. Happy to be short right now, right? But watching out. This could easily turn in here. It's turned, arguably 1, 2, 3 times from this kind of area. It's rebounded. So just watch out for that, guys. If it starts to go through, this could be another 2-3% down day, right? Easily. It could just capitulate through. But at the moment, got no real driver of that. Well, we do, the Fed, that's the next potential driver. But are we going to get anything new from the Fed? Probably not, right? Okay. Let me go take a look at gold and oil. I know these are the markets you guys are looking at and these guys are trading. Going to start off with the daily on gold. So hesitant this morning, having had, been strong in here as the dollar has weakened. We've seen, so just going back and looking at the dollar index in here. Here's the dollar index. The dollar has been weakening and gold has been going up. And you can see in here now, though, a dollar has rebounded. Dollar rebounded overnight, and here we've gone slightly back to, kind of risk-off scenario in the FX markets, joining the equity markets wobbling, gone back to risk-off scenario on FX. Now FX has been pretty much more risk on, even with equities going low. It's been the Australian, we spoke about this in the last few days, Australian dollar doing really, really well of late, but dipping back lower. Let me just see if I can bring up the Aussie. Don't usually look at it on this system, but let's see if I can get it. Yeah, US. Are you any with that Australian dollar? Let's go for that one. 6 AU2. No, let's go with 6 AM2. Take just a quick nod to the Australian dollar. And you see that it's been really strong. In it. So like last week and a half. Boom, 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 boom. And we've reversed this kind of downtrend line. This is obviously the futures market. But we've reversed the downtrend line, I can tell you, in the real market, like the cash market. But, if we take the line off the high, whoops, don't want to go in there. Let me just get rid of that. Oh, it's got all mind of its own at the moment. Let me start again. You got this trend line on the futures coming down through here. It's a really good trend line. Look, comes off it right there, and then reversed it a few days ago. And then yesterday held on to that, but then boom, down today. Yeah, so we've gone into more of a risk-off scenario in here going in this morning on FX. Australian dollar down and in, as we said, the dollar back up, and that translates into gold down. Okay. However, gold's is an inside daily pattern. Today's trading range inside yesterday's trading range, and we step into 15-minute on gold. You can see it's just trying to rebound now, getting a little rebound going, and you can see, look again, look, all of these supports in here. It's holding these supports in here at the moment. Gold. Yeah. So if I just chuck on a few horizontal lines, it's down through here clearly, but look here, holds it almost to the center. Held just above that one there, and then you got another one here and another one here below. Okay, so it's held these supports and has rebounded. Yeah, I'd be looking to venture long on gold in here, and looking for a turnaround. If we go back into risk on scenario on equities, if equities can get a rebound going, that means dollar will go back down again, and then that should help gold on the upside. And you've got a great trend line there, like on the 15-minute chart. drawn off this point here and this point here. And then you get multiple touches. It goes up, pokes above, fails, reverses up through there. Now on this current bar, that's around 1855. Takes that 1855. This looks a lot better for gold. So, bullish on gold in there. Let's take a look at oil. Oil's been very hesitant. We spoke about this impulse peak in here from back in here. This is the daily chart. This impulse, this red bar here, this is on the July contract. This is from the 18th of July. The high is 1239, 112.39. The market's been hesitant. Multiple pokes up towards that resistance and failing. I'm happy being short whilst below there. I'm just going to move this Australian dollar chart across to the end there. Oh, has it gone across onto that tab? I didn't know you could do that. Anyway, let's go back to oil. So the market's failed multiples at this 112.39 level. If we go and look at the 15-minute chart, there's the 112.39 level up there. Failed, and it's back up there and fading back again in here today. So I'm going to get rid of all of the analysis on here. Tentatively, look, you see it's failed. It poked above this peak and fell below this peak in here. This is the lower peak at 111.63. Tentatively bearish. But tentatively, probably would prefer not to be trading this, unless you're an oil trader. Obviously, you've got the data coming later today. But out of choice, I wouldn't be trading this one. But if I did, I'd probably be looking for a counter short in here, looking to fit a short on a breakdown, maybe through this trend line here, certainly below that low there, which is at 110.25. So tentatively bearish, but prefer not to trade that one really. All right, guys. All right, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe. I'll be back with you with another bull versus bear webinar tomorrow. Actually, I won't be with you tomorrow. James has got the webinar tomorrow. I'll catch up with you guys on TGI Friday.